Hello traders and welcome to another video review. Today is Wednesday, May 14th, 2025. Let's take a look at the economic calendar for today. Overnight data looks very poor. Electronic card retail sales in New Zealand at 0%. Wage price index at 0.9% beats the expectations slightly in Australia. We are waiting for the CPI data, and today is the CPI day. The markets are getting ready to receive the CPI data from the Eurozone countries, Sweden, Germany, Eurozone, and Spain, and so on. That's mostly during the early London session. For example, German CPI data are already published, 0.4%, just as expected. So we got a slight increase from 0.3 to 0.4%. So that's kind of a good for the euro dollar in the short term. Spanish CPI 2.2% in line with the expectations, a little bit down from 2.3%, and that's about the CPI data. Inflation, German Buba President Joachim Nagel will give a speech at 10:15. Then we have the new loans from China, and 11:15 we got the Fed Welles to give a speech. OPEC monthly report at 1 o'clock, bidding permits from Canada at 2:30, and then we got crude oil inventories from the US scheduled for release at 4:30, together with the Cushing crude oil inventories. German Buba Balz will give a speech at 6 o'clock, and then 20 minutes to midnight, FOMC member Daly will give a speech. So pretty nice data set from the Eurozone. We are waiting for the data during the US session. However, it doesn't actually look that much violate as it is usually during the data releases. Nevertheless, without any further ado, let's take a look at the charts. We start with euro dollar. After the CPI data release, the euro dollar is moving a little bit higher towards the technical resistance that used to be a support at 1.1206. We retrace almost 38% of the last big swing to the upside, wave 1-3, and now it looks like we might have some sort of the bullish engulfing pattern. Let's go to the 4-hour time frame chart. On the 4-hour time frame chart, you can see that this movement to the upside is quite nice. So possibly, if there is a possibility to, this is the technical resistance. Now it's going to act as the technical support. And let me add just one last level of the technical support, temporary technical support in the middle of nowhere, but very close to the 38% Fibonacci retracement, 1.1066, so that's the support as well. If we break back above the level of 1.1206, then the outlook might be a little bit more bullish. But first, let's add some sort of the channel here. Why? Because the corrective cycle here looks like it is trading inside of the channel, and my suspicion was correct. So we need to break above the technical resistance, above the 100 periods moving average, now 1.1319, and then out of the upper channel line towards the level of 1.1386. If we get there, the chances that the bottom is already done at 1.1064 are higher, and if the movement to the upside is impulsive, there are chances for the wave 5 to unfold shortly. So that's the euro dollar. Let's take a look at the US dollar versus the Japanese yen, because we got a breakout out of the channel as well. Very nice movement to the upside. Local high was made above the technical resistance, as you can see here, at 148.66. However, the market moved back towards the upper channel line again, so we are below the technical resistance as the market is moving lower from the extremely overbought conditions. That's the obvious pullback here. We've seen it before many times. We got local high, local low, higher high, higher low, higher high. Now the higher low is needed. So as long as we trade above the level here, this is 146.23, the outlook remains bullish. Momentum is positive, not that strong, 57 points, but not weak as well. So the outlook for the US dollar versus the Japanese yen remains bullish. Ahead of the data release, crude oil is looking quite bullish. We broke above the short-term trend line. We broke above the 100 periods moving average on a 4-hour time frame chart. There is a technical support at 61.53. Local highs are being made. The last one is 63.89. Next target is the swing high from the end of the April 2025, located at 65.10. So the sequence of the consecutive higher highs and higher lows is being made. Bulls are in charge of the market. However, they already hit the extremely overbought conditions, but if the data are in favor of the bulls, they might easily move above the technical resistance and test the level of 66 or even 67 dollars per barrel of oil. So the outlook remains bullish. Let's take a look at the Bitcoin. The Bitcoin is consolidating the recent gains, and we have established a local range here. 105,854 is the technical resistance for the range. 100,684 is the technical resistance for the support. So this is our range. Let me just make it maybe where is my rectangle? There you go. Let me just make it like a rectangle so we know what is going on here. This area here is the range area. So we are consolidating the recent gains. Maybe I will just make it like a little bit different, like this, something like that. There you go. This is the range area. If we break out of this, let's say, yellow rectangle to the upside, it's quite possible. Then, of course, there is the all-time high and the big supply zone. The market managed to test the level of 50, a little bit of a breakout towards 48 points. Now it's back towards the level of 60, 65. So it looks like the dips are being bought, and the market is right now moving in the right direction for the bulls, which is of course to the upside. So now the situation with the range is very simple. Breakout to the upside is expected because of the positive momentum. Any movement below the range low and below the technical support, as you can see, it's very close here, makes this 100 periods moving average up for a test. Any breakout below the moving average is bearish in the short term. Lower levels are expected. Please notice we are very close, and we are getting closer to the supply zone and the all-time high. So the Bitcoin is definitely in the uptrend. If we speak about the Bitcoin, we cannot say nothing about the Ethereum, because Ethereum is doing its best thing in months. So right now we broke above 2,190 now technical support. We are heading towards this level here, 2,932. That's a big level here, ahead of the last year. Yes, last year high. Last year high is 4,106. We are already at the level of 2,735. So very nice movement to the upside. The long-term support, it looks like it had been established already at the lows of 1,383. So let me just emphasize this a little bit more. There you go. This is the major technical support. Obviously, there is some sort of that trend line here. But when you look at this, you can see straight on that we broke this trend line already with this candle. So it's not necessary to have it anymore, because it won't be helpful and just clutter your screen. Right now, what we can do apparently is to see how much did we retrace. That's not a problem. We can always do this. So first level is here. The second swing level is somewhere here. So let me just make it like that, and you can see that we retraced 50% already, exactly, almost to the dollar, right? So this is the currently key level of the retracement, because the market conditions are already extremely overbought. So we might see some sort of the downside pullback. However, if you let me just zoom up a little bit. There you go. If you take a look at the cycle that is being developed here is clearly impulsive. So if we clear 50%, if we clear technical resistance at 2,924, if we clear 61% of the Fibonacci retracement at 3,077, the road towards the high of the 2024 is open. So please keep an eye on the current developments. It's very bullish. It's very strong, looking good for the bulls right now. The Ethereum is the Ethereum bulls are trying to get this pullback to the upside to be at the beginning of the new short-term trend higher, or the continuation of the longer time frame uptrend. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.